Judy, welcome to the virtual podcast.
Thanks for having me, Michael.
It is fab to have you here and coming in at short notice, but we should be pretty much navigating your sweet spot, I reckon, today, given your experience. So no worries there. Now, where I'd love to kick off, Judy, is actually what your experience is perhaps on your most recent. Like, what's it like being on the money side for once rather than kind of perhaps being on the other?
That is a great question. It's something someone hasn't asked me for a while, actually, because I've been in the role at Euphemia now for a couple of years. And the first few months were actually really difficult because my previous role was as the CEO of Startup Victoria, which is now known as the Startup Network. That's Australia's largest startup community for entrepreneurs with over 60,000 people in the network. And so my job for many years prior to Euphemia was to help founders and to help them go from I've got an idea to building an MVP to finding product market fit to scaling, going into new markets to exiting, and everything in between, like both success and failure. And so a big part of my job was helping founders find money, find talent, find other people who've solved that problem before, help them see around a corner. And so the relationships that you would build with founders were super awesome. Like, they were just authentic. You got the real talk express, all of the things that kept someone up at night. You're that midnight call. It's like, how do I fire my CTO?
Everyone's fucked.
Yeah, exactly.
Excuse the language.
I have a problem with my co-founder, blah, blah, blah. Like, you would just hear all that, oh my God, I don't know how to make payroll. Yeah. Like, I've only got a month's worth of runway. You would just have those conversations all the time with founders. Now being an investor,
everything's great.
It's a slightly different role, and you see the same problems, but they just have a different lens on them. They're slightly more polished, but and the great relationships with founders in our portfolio still have that level of vulnerability, still have that level of trust. But being now an allocator of capital, it's a totally different job. It comes with completely different challenges because you now really have two masters and they're equal. You need to serve the founders because you're still in service of those entrepreneurs and the people within those companies to help them grow, be successful and create value, deliver the innovation, deliver on their promise. But at the end of the day, you have your own goals as the investor as well. So it's been an interesting change. I'm used to it now, but it was a strange mindset shift in the first few months.
Yeah, I remember when I was in capital raising myself more directly, like raising for a fund. And I think when I started to learn I was completely fresh and newbie to this space. And I was just like, family offices, what is going on in these spaces? And then you read about them and it seems like a very, what's it like, just out of interest, working on that side in terms of a day-to-day? Because it sounds like it could be very glamorous. You get access to resources or opportunity to deploy resources that you maybe not had that opportunity to do before, or you're in this all of a sudden a world of abundance. So what is it like in that space?
It's funny you say that. Sometimes when I try and describe my job to people who aren't familiar with the tech ecosystem and with the venture industry, I just describe my job as well-directed abundance. That's the job. But it's pretty phenomenal. It's, for context, for those who are listening and are not familiar with Euphemia, or really maybe not familiar with the family office world. So Euphemia, which is where I'm currently the group CEO, we're at the family office for Dom Pym, who's an Australian fintech entrepreneur and investor. He's most well known for being the co-founder of Up, which is Australia's most loved digital bank. And prior to that, the co-founder of Pin Payments and several other successful companies. And so our mission really at Euphemia is to make awesome. So we're not trying to build a multi-generational family office where, it's this ultra high net worth dynasty for generations to come. Dom is an incredible entrepreneur and an incredible human, and we're basically redirecting this capital that has been created through his success in the tech ecosystem and giving that back, investing that into the next generation of Aussie entrepreneurs and innovative funders in the ecosystem. So it really is well-directed abundance. So we invest in Fintech to try and help fix money, climate tech to try and help fix the planet, women-led startups, or really any founder from a disadvantaged background, and startup infrastructure, so like the picks and shovels of the tech sector.
Cool.
So that's Euphemia, and more broadly, there's a property portfolio, a share portfolio, and a foundation to help people in need.
Cool. And are you drinking from gold chalices all the time?
No.
Or is it just on Fridays? Or
No, definitely not.
Okay.
Definitely not. Like we try and put the capital to work at a pretty high rate. So there's not a lot of luxe things going around. There's no yachts. There's no Lamborghinis. There's none of that. It's just like investing into great companies that
Cool.
are building innovative products for the market and. Yeah, that's where the money goes. Otherwise, it's jeans and t-shirts around here.
Ah, okay. All right. Well, that's a shame. It's kind of killed my dreams there, Judy. But anyway, let's. So tell me, where I'd love to actually take this conversation is actually more into what everyday investors can learn from a family office. So, family office specifically set up with the intent of really like a professional outfit to assess opportunities or maybe seek out opportunities, then evaluate them, and then ultimately to invest in the ones they like or kind of fit the mandate. What are your takeaways? And this is not advice, to be very clear, but just in terms of what are your takeaways at how, when you've got a kind of professional outfit who's doing it on a day-to-day basis, fielding, I don't know what your deal flow might be like, but I would imagine it could be in the thousands every month, maybe more.
Yeah, we would get hundreds of opportunities. Yeah,
Got you.
for sure on that cadence.
So, if you're thinking about what are the expectations? Like, are you kind of only looking for a nugget a month? You're looking for 10 nuggets? What's the kind of mindset you're bringing into this kind of when you're a professional investor?
For sure. And definitely this is not financial advice. Please seek professional financial advice for your own situation. But so how we approach investment strategy, like first of all, like you have to start with your goal. Like what are you trying to achieve? And then based on that, like what's your risk profile? What's your thesis? Where do you want to deploy that money? So we really started with thinking about like what's success for us. So for example, like one of the things we're looking to do is not just make money. Like that's really boring. We want to actually inspire a whole new wave of Euphemias to exist in the Australian tech sector. So more entrepreneurs like Dom having an exit, selling their company, or early stage employees or early investors, making money from their investments and then going on and doing the same, reinvesting that wealth back into the next generation. Because the more people we have investing in technology, the more likely we are to see innovation delivered to market more quickly, the more quickly we can solve the biggest problems in the world, like financial equality, climate change, etc. So that's sort of the rationale is to, and to do that, you have to create great commercial returns to demonstrate that this is a worthwhile endeavour and a worthwhile use of your funds. So especially in Australia when we're obsessed with property. So this
We
is
are obsessed
an
with
asset
property.
class that
Yeah.
still requires a lot of education, I'd
Yeah.
say, for most consumers. So once you've got your goal in mind, whatever that needs to look like. So for us, it also just still needs to look like outsized returns compared to traditional asset classes.
Okay.
Then it's your thesis. So how do you want to narrow the field? Because the venture landscape is so broad. Like, do you care about health tech? Do you care about AI? Do you care about, crypto? Do you care about, agriculture and food? Like what? And for us, it was really like, what do we really know a lot about? So we can actually do good due diligence. We know the landscape, we know the industry, we understand the problems. We can actually assess a company quite quickly based on our knowledge and expertise.
Yep.
And also where do things just need to be solved? So that's, for example, where Fintech came from in our thesis. Like Dom is the Fintech guru. Like he won Fintech Leader of the Year 3 times in a row in 2022
Wow.
from 3 different organizations. And climate tech, we're not experts, but it's a no-brainer. Like we have to invest in climate tech. That's the biggest problem to solve. Your goal, your thesis, and then really like finding sources of deal flow. Like where are the best investment opportunities within your chosen filters? And they don't just have to be those filters, by the way. Like other investors, there's a great other family office called Triple. They're more of an impact investment family office, and one of their filters is like, where are we going to learn? So a lot of their investments are based
Cool.
on things they know nothing about that
Wow.
you're really curious, to
Wow.
learn about. So whatever your filters are, create them, narrow down your deal flow, and then find where are those opportunities. And that's why like Virtual is a great platform once you've got a thesis, because you can like have those email campaigns come into your inbox, discover those companies on a monthly basis, be looking at those companies, filter them. So it's a pretty great source of deal flow. Another great place to find good deal flow is going to startup industry events like pitch nights or conferences, meetups, like just being on the circuit and finding those companies really early. And yeah, just subscribing to angel syndicates is another great way. So if you're a sophisticated investor, then being a part of syndicates, because then you're really, syndicate leads are doing the work to find the deal flow for you.
Yeah, very cool. And I guess when you're a professional outfit, deal flow is everything in terms of that space, right? And making sure you're finding the right types of deals for you. In terms of, you're a significant investor now in Virtual, I mean, as the family office is. What do you see as the opportunity in Virtual from your perspective?
It's a major piece of infrastructure for the Australian startup ecosystem. So we get really excited about like, when we find, I know it's nerdy, but like we genuinely get really excited when we find something that sits at like the intersection of like some of our theses. And so, Virtual is fintech and it's startup infrastructure. Like it's a core pillar of the money machine of the ecosystem. They're a platform, they are a facilitator of transactions, and any of those kind of transactions facilitator platforms, like more begets more. So we get really excited about those. Like I would call them like a multiplier organization, because, it's not just 1 = 1, it's like 1 + 1 = 50. Like, because you have all of the people participating in the campaign, so all of the investors. And let's say a company was coming on board to raise, and let's say it was a consumer-focused brand, and all of those consumers loved that product, but didn't even know they could become investors. Now, all of a sudden, there's an equity crowdfund on the platform, and they can not just be consumers of that product, they can become investors of that product. And then now they're in the ecosystem of the startup infrastructure.
Yeah.
Now they're a virtual investor, and they discover a new company, and all of a sudden they're now exposed to a whole diverse range of investment opportunities that they wouldn't have otherwise. And on the other side, if you think about you're a company, like giving you access to other investors that you wouldn't have otherwise through doing an equity crowdfunding raise, because the sophisticated investor pool, like whilst there's a lot there, there's still a lot hidden. Like there aren't actually great databases that map out all of the sophisticated investors in the country. And so getting access to retail investors as well, it just broadens your storytellers out in market and can help with growth. So if you're a company raising capital, let's say you're a fintech and you've got an app that you're trying, or even if it's B2B, like you've got a product in market and you're trying to get product market fit, you're trying to get people to buy your product, buy your service, give you feedback, learn on it, iterate it. You've now just amplified. Instead of having like 20 people on your cap table, now you've got 200 or 2,000 people on your cap table. That's now 200 or 2,000, however many end up participating in your deal. All of those people are now out there with skin in the game to help your company succeed, much more likely to provide introductions, become a customer, tell their friends or family about it. So there's just lots of all of these like ripples in a pond type of benefits to participating in the ecosystem. It's pretty awesome.
And you've got quite a unique perspective given your background. So you worked formerly for, let me get this name right, the Australian Startup Vic, right, which is an association you were just educating before. So for those who get mixed up with Launch Vic, like I did just before we hit record, help us understand what's the kind of purpose or role of Startup Vic.
Yes. So at the time when I was there, it was called Startup Vic or Startup Victoria. It's now known as the Startup Network. It's the national peak body for startups and founders in Australia. And that organisation exists to help founders to succeed. So find the answers to the questions that they have, connect with experts, learn, like just basically get to the next stage of growth through the power of community. So it's really the largest network of founders, startup employees, investors, tech product service providers, government, anyone who's interested in the startup ecosystem. It's kind of like the go-to place. So you kind of start here and then find the next answer, find the next person, find the next provider.
And your role as CEO was to grow the membership or do something a bit more impactful than...
Yeah, I mean, I'd say that would be a crude description of one part of my job. Yes, of
Sorry
course.
to break it
No,
down
you
so
have to.
commercially.
Yeah, and totally,
Without that.
totally delivered on that. We started at 25. By the time I left, it was 60,000. So,
Okay, great. Killed it.
Nailed it. But the job really is to help founders to succeed.
Cool.
And so, indirectly, what that meant is like lobbying government on behalf of members, for policy change and advocacy. It meant bringing in like the best that money can buy, the best that access can buy from our networks to like people who can provide inspiration, inside education. Like I think Vicky Sterling, who's the new CEO, has done a wonderful job. She brought in Sam Altman from OpenAI, and there was an amazing fireside chat with him last year in 2023. And like it's things like that. So it's just how can we act on behalf of the collective community to deliver something of value that's going to help them get to that next milestone.
What were your reflections on that role now? Now you've been out for a few years. What are you, in terms of the ecosystem? I think it's interesting, you've been always largely interested in the ecosystem and working on the ecosystem rather than in it. Maybe one of the same at the same time. But what are your reflections at this point around that?
Yeah. There is still such a need for some like the more like when I first started at Startup Vic, like the Victorian and even the broader Australian startup ecosystem was still very infant. It was still immature. We didn't have anywhere as many funds as we do now for capital. We didn't have as many people working in startups. Like it was more of a scene rather than a sector, whereas if you fast forward to today, like we've actually, I think, thanks to organisations like the Tech Council of Australia, formerly Startup Oz, like organisations that have done a great job, and even LaunchVic as well have done a great job on reporting and they're being a voice into Parliament for the economic contribution of this sector. One of the fastest growing, highest contributors to GDP and job growth over the next 10 years. And so we're doing a much better job, I think, as a sector of collectively voicing those opinions to the people that need to hear them. But that being said, with growth and maturity comes complexity and noise. And so now, like if you're a founder, there isn't just one startup accelerator or the one at your university. There's like 50 you can choose from. If you're an early stage entrepreneur and you've got an idea for a new business, there's so many places you can go to. And so there's definitely more than ever, I would say, a need for a community or a place or a business to guide founders through that noise and that complexity and just filter it out. Because there are also a lot of like armchair consultants in the industry now. You know, like there's a lot of people giving advice, having never done that thing before, or they've read a book, and are giving advice. And so, making sure you're getting advice from like the right people is definitely still important.
How did you navigate that issue at Startup Victoria?
Yeah, we built a program called Office Hours, which is not a very creative name, does what it says on the tin.
Yep.
So we built a network of advisors who we knew from our network of members were people that they would go to for, so like on key topics. You've got like someone in legal, someone in technology, someone in product, someone in talent, someone in finances, like every topic you could imagine. It's sort of the best of the best, and they were people who would donate their time to the organisation and give back. So if you're a member of the organisation, you could have unlimited office hours meetings. It's not a mentoring relationship. They're just 30-minute Zoom calls to get the answer to the immediate question that you have. So, for example, you could jump on and have a 30-minute Zoom with Doug English, who's the co-founder of Culture Amp and the CTO, and talk about your tech stack or how to hire a great, next dev for your team.
Okay, very, very cool. So then it kind of begs the question, what is the role of government? Because that sounds very much like what a government organisation might throw or support. So what do you think, and what is perhaps more broadly the family office that you work for, what do they think about the role of government in the startup space?
For sure. It's like a critical lever, I would say. Like if you think about all the different ingredients that go into like a startup ecosystem soup, you've got your founders, they're that beating heart, like without the founders, none of this exists because no one's building companies. You got your startup employees, your investors, your service providers to those companies, government policy writers, and then your corporates who are engaging as either customers, investors, or competitors. And so government play a key role in enabling those companies and these early stage companies to fast track their growth and to remove barriers that are in the way. So, for example, raising capital is a really hard thing to do for a lot of founders, especially now. And, government policy, for example, the ESVCLP fund, tax incentive, that provides a capital gains tax benefit for investors who participate in venture funds. And so there's an active incentive that's been designed by the government to get more sophisticated investors to invest in the asset class in Australia. So things like that, or for example, making it easier to hire talent and providing particular visas for those who, if you're trying to hire talent from a more mature overseas ecosystem and bring them to Australia, helping to make that pathway more smooth, or the work of Austrade, for example, like helping those who are ready to export and set up a new office in an international market, making sure that's as smooth as possible, that they're getting warm introductions on the ground, that they're getting set up with the right bank contacts, employment contacts, like making sure that that's nice and easy. So, and more broadly, like helping the rest of the world, like, because, a startup is like, it's much more popular these days to be working in tech and startups, but there's still a lot we can do to win more than our fair share of talent in the corporate sector. And so even just building awareness and education that this industry is serious and mature and grown up, and we're not just in garages making apps. We're building infrastructure to change the economy. And they do a great job there.
Yeah, very cool. And from your perspective, given you've been in this space for a while now, who do you look to as leaders in this space, or who do you, maybe not even leaders, like who kind of like, oh wow, that's an inspiring model, or maybe that's a geography perspective, or from, it could be a city, it could be a town, it could be just a small family office perhaps.
Yeah, I love the work that F5 Collective are doing, which is, you may not have heard of them before. They're a family office, and they have been working pretty hard on legislating with government in California to make it mandatory for VC funds to publish their gender investment data. The theory being, if you're publicly, showing what you're investing in across all male teams, mixed gender teams, and all women teams, that it will drive those funds to invest in more diverse teams. So that has been legislated in the state of California, thanks to their lobbying. That's Tracy Warren, who's the CEO of F5 Collective. And so they're doing a great job, I think, to champion diversity in the venture ecosystem. And we're lucky that they're not just investing in California, they are investing in Australia and the broader Oceania region as well. So I think what Tracy's doing is fantastic. I do love the work that Cheryl Mack does at Aussie Angels. Disclaimer, we're an investor in Aussie Angels as well. It's another one that we get really excited about. They're fintech and startup infrastructure. So that's the platform for angel syndicate investing in Australia. And she's been very vocal, on the topic of government to make sure that any changes that might have unintended consequences on our sector are really well considered. So, for example, there was an article in the AFR over the weekend that was speaking about Labor's intent to make some changes to the sophisticated investor test and increase the asset and or income threshold from 250k and 2.5 mil of assets to 450k income and 4.5 mil of assets. And already that 250k is about 2 to 3% of the Australian population, and so you'd be reducing it to like less than 1%. And so it would have pretty significant unintended consequences for the diversity of investors participating in the asset class and how accessible it is to people. And so she's been very vocal on socials and in the Australian media since that article came out, trying to highlight what some of the unintended consequences might be. And no one can argue with the fact that, like, absolutely we need bodies like ASIC, we need the government to protect consumers. Like, regulation does need to exist to avoid people from getting scammed and to, make sure that people aren't falling prey to any predatory capital raising practices. We definitely need rules. but making sure that government is very deeply engaging with industry on consultation is something that I do think could be improved. I think consultation papers do get released, and there's always an opportunity for people to contribute to those. Like, there is a process that government follows, but I think sometimes so many in the startup sector are just so busy building their own, destiny that they might miss it.
Yeah.
And then it's too late. So I think, the work that Cheryl's doing there to try and advocate for the industry is awesome.
Do you think it's the right mechanism? I appreciate lifting. I think I read an article, I think it was the AFR last night, and it was talking about how the $2.5 million worth of net assets represented 2 to 3% in 2003, and now represents 16% of the population here. So, like, there has been a big, mainly because I think Aussie property, which we all love,
That's right,
has gone up by 290% in 20 years, which is bonkers. So, do you think it's are they trying to do something to protect, air quotes there for those who aren't watching the video, but actually the real protection is the ones who are just doing the wrong thing, not necessarily lifting the limit? What's your take on that?
Yeah, and my understanding is the same as yours, in that that it has increased from 2 to 3% to 16%, not on the income test, but on the asset test, largely due to the appreciation of value of the primary residence.
Yeah.
Look, I think the reality is, and I think Michael Bacco put it pretty well, he's the CEO of StartMate, is that, like, it's in the name, sophisticated investor. So we should have a test that tells us, basically, are you aware that you could lose all your money? Are you aware that you have no control? Are you aware that you have no rights? Are you aware that, like, this lockup, it's illiquid, probably for the next, like, at least 7 to 10
years,
maybe sometimes even 12 or 15. So,
Yep.
like, it's really more about, like, we want to make sure that whenever someone's investing in a financial product, that they're fully aware of what their dollars are going into. And so we want to make sure that people who haven't had the experience, haven't had exposure to the asset class, that they understand that these are sort of the rules of this financial product, that it's illiquid, that it's a long-term lockup, and that it's ultra high risk. It's the highest risk category of asset. Well, I don't know, people might have other views on crypto, but, like, it's a high risk asset class. So, like, the spirit, I believe the spirit of the test is, we only want people participating in this asset class who are fully aware of the risks and can bear those costs in terms of, like, those on our society. Can you afford to lose? And what impact will that have on your life?
Yeah. It's an interesting question, isn't it? And how do you best do that? So
yeah, and it's not a simple answer.
No, for sure.
And so, like, I think a lot of the debate online since that article came out is that, like, it's a very crude test for a very nuanced thing. I don't actually know what the answer is. A lot of the industry is calling for, like, an actual experience test or other things like that. I think it's probably, what I'd like to see is an exception to that rule, if you can show that you understand, like, so maybe that rule exists, the increase on the asset test, plus if there's a workaround that if you do fall into that category.
Yeah, and can you be sophisticated without having the net worth? That would be a question, right? Yeah,
because we want to give people, and this is why, like, again, not to be screaming virtual from the rooftops. This is why virtual is so awesome.
You are welcome to do that. It's the right space for it. So.
Yeah, because, like, we've talked a lot about sophisticated investors, but, like, the startup asset class, the venture asset class, isn't just for sophisticated investors. And the work that Birchall have done to bring equity crowdfunding and allow retail and consumer investors to invest in private companies that they would never have had access to on the ASX or in ETFs or anything like that, like, to give them access to private companies, never been done before in Australia. They were the first, and they're the market leader, and they've truly disrupted the investment landscape in the country, which is phenomenal. And I just am so excited to be a part of their journey. So it's pretty awesome. And, it just means that there are different levels of disclosure. Like, there is for all the companies that are raising on Birchall, because there is that retail investor element, like, the level of disclosure is greater. So maybe there's actually something we can learn from Birchall in this sophisticated investor test, sort of topic that's floating around on the internet right now, is how have Birchall gone about providing that disclosure and working with companies who are raising capital to because the retail requirements and regulations are much more strict
Yeah.
because they don't meet any of those tests. Like you can earn as little or as much as you like and still invest on virtual. And so I think there's actually a lot we could learn from how virtual have done that.
I want to go back to your talk around some of the work around investing in women just briefly. It's an issue I've been aware of. I have no idea in terms of the up-to-date data. I'm hoping you do. But are we solving that issue? Because
No, we're going backwards.
Oh, gosh, come on.
Unfortunately, I shouldn't laugh because it's a really depressing statistic. Yeah, the numbers show, and some of the rationales as to why is we've obviously experienced a market downturn from sort of the start of 2022. You know, we're not out of the woods yet in terms of that downturn. And what we know is that when times are tough, that more risk-averse sort of decision-making layer comes on, and there's this unconscious bias that means we typically go for what's worked in the past, and what's worked in the past has looked like a certain thing that doesn't look like what I haven't seen be successful before. So there's a lot of other contributing factors, but unfortunately we are going back.
And you're talking domestically or internationally?
Globally.
Or globally? Wow. And domestically, are we any better?
No.
Okay.
No, we're
worse. Okay.
Unfortunately.
Searching for some nuggets, but no. Okay.
But I mean, I think there are some shining lights, in the depressing headlines of what the statistics are showing in terms of the amount of investment capital that's going to mixed gender and all female teams. Like, number one is that what hasn't changed in the data is that mixed gender teams still outperform their all male counterparts in terms of cash on cash returns significantly. So the leading theory being that mixed gender or all female teams are more capital efficient. There are some arguments as to why that is. They have to be more capital efficient because they're given less capital, so they have to achieve the same goals with less money. And the other shining light is that everyone knows this is a problem and everyone is working it. I'm yet to meet someone in the Australian startup ecosystem who hears this problem and goes, nah, I don't care. Like, everyone cares and everyone wants to solve it. So there's a lot of goodwill in the ecosystem. I think a great example of that is an initiative called Equity Clear. So Euphemia has signed up to the pledge. So it's a pledge, so to speak, where you get as many VC funds as we possibly can. Airtree's on the list, Albert's Family Office is on the list, Scale Investors are on the list, Tractor Ventures are on the list, like companies who are investing funds. And again, like similar to what F5 did in California, taking a leaf out of their book, publishing the data of your deal flow. So how many companies tried to pitch you? What was their gender metrics? How many did you investigate? How many did you take a meeting with? And how many did you invest in? And what was the dollar ratio across those teams? So we're participating in that. And yeah, so that's, I think, another great example. But there's so much more we can do than just report the data.
Yeah.
But it's a complex problem. It will also take the passage of time. And yeah, we're not there yet.
We're not there yet. Okay. The only way's up by the sounds of things. Yeah.
Yeah, I mean, but practically, we need more women investing.
Yeah.
Because the more women that are investing, the less unconscious bias that's filtering out women from decisions. We need more women starting startups and becoming founders. We need more women starting technology-driven companies as opposed to lifestyle and small businesses. We need more women executives. We need more women on boards. We need more women as partners of these venture funds with equal carry. There's a lot we can do.
Yeah, cool. Okay, awesome. Well, Judy, I think it's been a fascinating insight to the world of, what do you say? Efficient abundance. Is that the use?
Oh, well-directed abundance.
Well-directed abundance.
But efficient works should be efficient.
So, yeah, thank you so much for your insight and for taking the time to join us today. It's been an absolute pleasure. Thank you.
Thank you for having me. And if there's anyone listening who wants to learn more about Euphemia and what we're up to, they can find us at euphemia.com or at Euphemia Invest on socials. And if you like the sound of our thesis, you like fintech, you like climate tech, you like investing in women and diverse founders and startup infrastructure, if you're as nerdy about that stuff as Dom and I are, you can join our syndicate. So we have a syndicate on Aussie Angels where we share some of our best deals with our community of co-investors. So that is available at Aussie Angels. If you just Google search Euphemia Aussie Angels, you'll find us.
Cool. And actually, I will jump in, despite my saying let's finish it up, but actually, what's not awesome yet, or what are you looking to make awesome in 2024, which doesn't exist yet? What's the missing in the awesome?
Ooh. one's ever asked me that before. I'd love to see more collaboration with our international counterparts. We're pretty, we are an island on the other side
Albeit a big one, yep.
a lot of the tech world. And I think a lot of the time we sort of invent things for the first time on first principles when, we're really only in, like, the Australian tech sector is still very, very immature.
Yeah.
Like, we're maybe on our fourth cycle of unicorns. You had your first wave of, like, MYOB, REA, car sales, etc. Your second wave, Invado, Atlassian. Your third wave coming up, like, with your link trees and your Misty Arms. And so we're really only, like, 4-ish cycles of companies going from zero to an exit. Whereas if you go to the US, London, Berlin, like, these, like, Singapore, they're on, like, 20, 30,
Wow.
40 cycles. And so a lot of the problems we're solving as a sector and as a community, government interventions, peer-to-peer co-investments, hiring talent, all these kind of things. Like, there are lots of people in other markets who have done this before that we can learn from. We don't have to invent things ourselves. So I'd love to see, like, more bridges to other ecosystems
Cool.
this year.
Okay. And sounds like you're going to be investing in facilitating that. Is that right?
I should. I seem passionate about it. I'd love to. Well, I think this is really the role. I really do think this is the role of an organisation like the Startup Network,
Yep.
like our government agencies, LaunchVic, like the Tech Council of Australia. And it's because it happens for those who are funded through VCs. Like, VCs do an awesome job
Yep.
of plugging into international markets, but it's just for the cohort of founders that they've invested in. And there are lots of bootstrap founders in the
Yep.
ecosystem. There are a lot of underfunded, early stage. So it's more, how do we find the organisations like the Startup Network to build those bridges for
Yeah.
people?
Okay. So you don't have to be part of a VC to access the
Exactly.
wealth of knowledge which is out
Exactly.
there. Yeah, cool. Awesome. Judy, thank you.
Thanks for having me.
Pleasure.